Let's get started. So appreciate everybody being here. Now, right now the oil crisis is driving sharp, unpredictable swings in the market. False breakouts are everywhere. Clean trends are hard to trust, and reacting quickly without a clear system can do you more harm than good. So that's exactly why put together. I'm hosting this, interactive workshop today. So in this session today, I'm going to show you how I use and filter out the noise and the zero in on high probability setups, even when the markets are experiencing this kind of extreme uncertainty. So that's what we're going to get into today, and I'm going to share a lot of great stuff with you. Hopefully, you walk away and start back Monday with a lot of different ways you can look at the market. So that being said, let us get started here today. Now, the first thing I'm going to talk about here today, I'm going to go through kind of a top-down market review. Then I'm going to go over the kind of systematic approach I use. But a little background on myself before we get started. Now, I started my trading journey back in the mid 80s, actually, on the oil side. So I was fortunate enough to get my foot in the door, and I got a job at a company at that point called Coastal Corporation. They were a large integrated oil company out of Houston, Texas, and they had refining, all over the country, and also in Europe. So it was a great experience. But the first thing they did, they had a training program where they would actually train you to trade crude or crude oil products, things like that. So fantastic, exciting experience. They sent me down to the refinery they had in Corpus, Texas for about 3 months. And that was a great experience because what it did, it kind of, laid the foundation of how oil works and the processing side of it, how the tankers came into the refinery, offloaded, put it through the distillation towers and the products that were made. So it really gave me a really good footing and foundation to work from, to develop my oil skills and all that down the road. Now, they put me in the tanker chartering department next, and all the kind of scheduling and all that. So just a fantastic experience all around. And then finally got on the cargo trading desk, and that's where everything really kicked off. Also, sent me out to Singapore almost, I hadn't been there for about a year, and was able to go to Singapore for a couple of years and traded Asian crudes and products out there. So fantastic experience. If you ever get a chance, make sure to check out Singapore. The food is great. It was just a really awesome place. Now, then I went to a company called Trans World Oil. And at that time, this was back in the later 80s. It was the largest oil trading company in the world. So it's Fibro, Trans World, and Mark Rich. They were the three big kind of giant companies as far as the energy side of things. And spent about 17 years there with Trans World, 16 of those out of Bermuda, and ended up running the international trading desk for 10 years out of Bermuda. So that's really where I kind of really things started rolling, because we were in all the different energy sectors of the market. We eventually branched out into all the foreign exchange, all the different futures markets. So it was a lot of action, a lot of things going on. And that's when I first started trading options on Brent crude oil back in the North Sea in 1987. So been around the block on all that, and so we've got a lot here to cover, but I just kind of wanted to start with a little side trip background on myself. So that being said, again, thank you so much for being here. Now, the following presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. Now, as you probably know, the most time-consuming and expensive task in trading is finding high probability trade setups. Now, over the years, I gradually combined what I learned from when my boss paid for everything, and I developed my own research kind of process and the resources to use for it, developed my own proprietary technical trading indicators that you're going to see today, developed a strategic option guide that I use for selecting what option strategies to use, when for the best results, depending on the market environment we're trading. Now, this evolved into a process that finds the best trades and the best option strategies to use based on whatever the market condition that we're trading. So that was the start of the process. Now, what I recognized based on this, 4 decades of my trading journey is that my best and most profitable trades all had the same underlying characteristics. So what I did was I defined these kind of winning trade characteristics, and then I developed a repeatable trade selection process to identify and find them based on 13 steps that I laid out. So it's kind of a systematic selection process that I use. And in trading, the more systematic, mechanical you can make things, the better, because it takes out your emotions and makes it more of a repeatable process. You want to try to take those emotions out as much as you can. So first off, before we get into kind of the 13 steps, let's take a market review. We're currently going through a pretty wild and crazy time right now with the current situation on the oil crisis. And so kind of little market review here. So risk remains extremely high right now. And Friday we had a sharp sell-off, based on the macro-driven events. So the oil situation, the current war with Iran that we're experiencing, and then the fears of more inflation down the road from this huge spike in oil and this disruption. So we had a sharp drop. We've been in a down, kind of a downtrending market, but Friday the S&P was down over 1.7%. The Nasdaq was down almost 2%, and the Nasdaq and the Dow now are in correction mode. Where they're 10% off their highs. Now again, the primary driver, that geopolitical shock from the oil side of things, and that's spiked oil, up above $100 a barrel, and that's fueling the inflation fears, and we're starting to see massive risk off in the markets, various technical levels being broken, and that's you're starting to see this kind of cascading down. So the Nasdaq's been hit the hardest. The tech related sectors are very rate sensitive. So when we have rising yields and inflation expectation, that really hurts their valuations and the multiples. So the growth stocks are kind of getting hit a lot right now, being de-risked as the macro uncertainty, kind of increases. So the backdrop is worsening, is starting to affect now. Consumer sentiment is starting to fall off, and we're having that bigger fear of the inflation expectations and what the Fed's going to do on that. Now we're seeing institutions deleveraging and large equity selling flows coming in. So we're seeing the Nasdaq and Dow again, are correcting in a correction mode here, and we're seeing the worst losing streak, longest losing streak since we've had May of 2022. And remember what happened in 2022? We ended up with a 25% decline in the S&P 500 and a full-blown bear market. So hopefully that doesn't happen, but these are the kind of the situations that can develop to put us into that kind of spiral to the downside. So that's kind of a brief overview there. Now, currently, this is the S&P 500 on the daily. I refer to this as a medium-term time frame, and we're currently in risk off. You can see this. I've got a kind of risk off signal indicator that I've developed, and this white arrow here kind of signifies that. So you can see here we're breaking down hard below this 200-day moving average, and now we've broken below a 236 retracement. We'll go back over here in a minute and go through this. Well, I'll just do it right now. But that's the S&P 500, and then we've got the same if you want to relate it to the SPY. Breaking hard. I've got my risk off signal here, breaking down hard below key support. This was the prior week's low here. Friday we broke below that quite hard. Now the other thing I look at is momentum. We're currently down really hard on that. And then also if you look at the Nasdaq 100, we'll just kind of use the QQQ. Same situation. We've got this risk off signal I just had, and breaking hard below the 200-day moving average, breaking that prior week's low there. So things are not looking good as far as just the overview of the market when we look at the top-down analysis. So let's take a look now at the market internals and kind of see a little bit more of things that are starting to really impact the market. So first off, we've seen bond yields really starting to rise. So this is the 10-year yield by trading session after the war begins. So this is going to go back and show you kind of a related correlation where these yields start rising. This is the current kind of teal line here is the current situation where we are now. We're over, about 4.5% on the 10-year. And you can see here, this was the Gulf War. We got up to as high as over 6% during the Gulf War. And here was the Ukraine. When that situation hit, we got up to right about where we are here. But we're currently, coming in there, and now there's fear of more disruption, more inflation scare, and we could easily, potentially repeat back to where we were. So not looking good there as far as the 10-year yield, and that's what really is kind of also having a huge impact on the markets, and a lot of things that are kind of correlated with that. And it just starts to really kind of spiral out of control when you get the 10-year out of control like that. So that's the 10-year Treasury kind of comparison. Now, the other thing to look at and be, kind of aware of and follow for indications of what the markets are going to do is something we call the put-call ratio. And when you get you can see when the put-call ratio gets really extreme, where there's a lot more buying of the puts, at a certain point and level, you'll finally see the market kind of pull back and, and stall off of that. Now, this is a daily time frame. And if you look here, I was just trying to show you back here, this was when, the tariffs hit, back in April of last year, 2025. So when that, that started to transpire, we had a huge spike on the put call ratio, and it got up to over, a dollar relationship here. Okay. Now, when it gets too extreme, I mean, it's been more extreme than that, but this is kind of gives you a good guide or tool that you can use. Now, we're currently only right here at 0.96. So, what this tells me is that we can definitely get a lot more, a lot more fear in the market, a lot more panic in the market before this thing finally kind of capitulates off. So you can see, and if you look back here again, just back last year in April of 2025, you can see what happened. We finally got that kind of spike where everybody just kind of got that, really was running to the buying the puts and, risk off. And then finally, that's what kicked in, and that's what bottomed the market. So then you can see here that put call ratio had that final big spike, and then we had the move up in a beautiful trend that was just, really great, spectacular trend from April of last year, 2025, until right about where we are currently. Okay, so right now we still have some potential upside on that. So be aware, put call ratio is not showing that the bottom's in if you just, kind of follow that. And then the other kind of indicator you can follow for the internals is just to be aware of the VIX, the volatility index that calculates volatility off the S&P 500 futures option. So here you can see we had, this is also during the April of last year tariff situation, we had a spike all the way up here to 60. And currently you can see when the Gulf, when the first bomb started going off with the Iranian, US started to hit the Iranians, we had a spike right there to 35.3. And you can see that on Friday, we're having this starting to kind of push back up, and we broke above where it was on Monday. So this also shows that we can definitely get more, more of a spike in volatility before this market finds some footing to show some stability and potentially bottom. So that's a couple things to be aware of, and kind of follow these two kind of indicators will help you quite a bit. All right, now let's do also an oil market review. And but before we get into that, let's do kind of a top-down market review here. And so what I like to do is I typically will use my S&P 500, the SPX, and we're going to start off here with the monthly time frame, which I call the macro, and then you can see how the trends have been and where they're headed. So currently, if we look at this kind of top down, now, the way we used to do it before we had the charts and the technicals, we would use, fundamentals, so we'd have different, we'd have offices in different places in the world, and we, communicate with each other. and kind of develop a macro overview of the market. But now we can use, I like to use these charts, and to get a reference using the S&P 500, I start off with the monthly time frame. So you can see here, we are still, basically in an uptrend. If you look at, I like to use this kind of 21 moving average here, that dashed line, that's the 21 exponential moving average. And it's a good track of trends. So you can see that when the markets, back, this was, hold on one second, let me do something here. Let me get rid of this pen real quick. Now this was back in, just trying to get my timeline down here. So you can see we had the market sell-off, and here was April of, say, 2023, and then momentum started to shift back up. So with my indicators, this is what we call a cycle reversal, is a signal to a potential change in cycle. So this actually happened back in February of 2023. We had that happen. And then we had momentum cycle 1 here. You can see that blue, and 2, which confirms it. And then we had that beautiful trend up. So you can see it just kind of started, back about May of 2023, and just had a beautiful uptrend. This is also the monthly time frame, okay? And just track that 21 exponential all the way up. We had that one pullback, that was the tariff situation back in April of 2025, but then just a huge fast recovery. I think this was the fastest, snapback, that we've ever had. And so then it started trending back up, and you can see now we finally, this is the 8 exponential moving average. We broke that this month in March, and now we're getting the cycle reversal, that purple arrow there. But we still have, momentum is still what I call neutral. We have cycle 1, which is fast momentum, is negative, but 2 is positive. So there is still potential hope that this market can hold if you look at this, monthly macro time frame. So here's the area kind of really needs to hold right here. That's the 21, and that's coming in about 6,182. So that'd be like 618 on the S&P, SPY. So that's a, a ray of hope if we can hold this area here, and that would be also the 382 retracement of this move from this low to high that we had back in April. All right, so we're currently, let's see if I can zoom in a little bit more. You can see here that 382 retracement from the swing low here to the swing high is coming in right there in alignment with that 21 exponential moving average of this monthly time frame. So this is a pretty key critical area right here, that 61 kind of 95 area. Now, the next thing that I like to do is kind of drop it down to the next level. Like you're, flying at 30,000 feet, we want to zoom in, go a little bit lower to see more detail. So here we are now on the weekly time frame, which I refer to as the long-term trend, and we have broken the 236 retracement of this low to high, and now we're breaking through also. That's the 50 simple moving average, and that is a really key moving average as well. So we've broken through that, closed below it on Friday, and that was coming in at 64.70. So the next target down, based on our Fibonacci levels, and also you can see this kind of price action support, these tops right here, that is part of what can define in this situation, a short-term support. So we do have kind of some pretty good support right through here, and that's going to come in. Let's see exactly where that is. That is going to be right about, 61.70 right in here, 61.70, 61.75. So down to this area here. So that's a key area that we'll see if we can get some kind of support. But if we break through this level here, you can see there's a lot of potential downside, based on where we were back in just April of 2025. And then we go to the next time frame, the medium term daily, and it just, you can see it just unraveled and really fell apart, on Friday. So you can see here, my indicators, we had a cycle reversal back here. The first signal that we had was actually back here on the 3rd of February, you can see it, this kind of magenta arrow. That's kind of my leading indicator, say, okay, alert, potential change in cycle down here. And then we start to have momentum go negative. Now, this is also a volatility squeeze pattern these dots represent. And then we had that major breakdown, breaking that 21 and the 8 exponential, and it's just been a hard move to the downside. And there's my risk off indicator right there that kicked in on the 25th of March. So that's kind of a top-down market analysis, just to kind of put everybody on the same page here today of what I'm seeing. Now let's take a look at the oil sector and kind of the thing that kind of set everything off. So first off, let's take a look. Let me show you a couple of different things here. So the term structure of the crude oil market. So here's the May crude. This is kind of the prompt month. So Friday we went out back over $100, per barrel. So right here, so closed at actually about almost $101. Now this is the December 2028 contract. So you can see it's around 69. So the market is obviously very concerned right now with demand destruction, but is looking at the back end year, 2 years out, it's not, we're not going to be at this level. But the term structure of the oil, is probably, we're going to have a higher, the higher, kind of floor to the market probably going forward. So that's kind of a look and review there. And then here is just kind of what we call the front to back to show you this term structure as a spread. So here's the May crude, May long and short the May and the year 2026. Okay, so here's the front to back. So this is the May versus this. I'm sorry, this is the wrong spread. Let me show you I want to show you the front to back on the crude, and then I'm going to show you the crack spread. That's also a really big problem with the markets right now as far as jet fuel and diesel. So here's the front to back. This is May versus June crude oil. And so you can see this is what we call backwardation. And when we have extreme market conditions, that's when the front month gets more valuable than the months behind it, because everybody wants wants crude right now. So you can see that this had been running about, here is the spike that we initially had. But if you look back here, you can see what this front to back spread had been doing before we had the spike, based on the U.S. hitting Iran. So here it was back in, 1 second here. This is a 4 hour. Let me put this on a daily. So you can see how flat this was back here. So here it was just 25 cents a barrel over. Okay, so this was May, June, and this was the contract. This was back on the 18th of February. All right, so look at this. This is just this is how it's been. Look at this, how flat it was, the curve. Right here's zero. That means that's where the zero. That's where you've got May crude versus the June contract was actually below zero. It was in contango back here on the November 28th. Okay, now when had the first strike on Iran, look what happened. Here's where it spiked. So it went from its run about 20 cents per barrel over, 20 cents per barrel, okay? Blew up to this spike of, well, let me put on the 4 hour because that you'll see it better. And blew up and spiked up to $8 per barrel over. So here it was 20 cents per barrel over. Now it's $8 per barrel over, okay? And now it's starting to push back again to, $5 to $6 per barrel over. So that is a really scary looking situation right there. And the bigger problem, one of the other big problems, is that a huge amount of products come out of the, Persian Gulf, or the, Persian Gulf, or the Gulf, Arab Gulf there, from Saudi Arabia and Kuwait, and those are, kind of locked in because of the straits being blocked off. So you can see that's had a huge impact on products. And this is just the crack spread of heating oil. This is a May heating oil long versus May crude, okay? So you can see that is blown out to $80 per barrel over crude, okay? And so heating oil, so this is basically kind of like the jet fuel is actually even more than that, but this kind of shows you that relationship. And you can see that it had been running, you know, if you looked at, you know, going back further, you know, this has been, you know, the normal kind of situation was about $26 per barrel over, and now 80. So this is a really kind of a disaster kind of situation when you look at that crack spread. And then one more thing to look at is here's the Brent contract, which is the, you know, the contract that's used for kind of setting price on international crude. That's the Brent North Sea. And so you can see it went up to, you know, 120, and, you know, there's potential that this could go much higher as well. So just a lot of different things that are impacting the market. Obviously from the crude side, just to kind of show you some of the different relationships there. And then here's one more just kind of relationship to kind of point out. This is what we call the Brent WTI spread, okay? So this is Brent long versus WTI short, and this is the May contract. So you can see how elevated over WTI Brent is, because that's the crude that the Europeans and the you know, they're pricing all their barrels off of, which is not landlocked like WTI. So this is showing you the international market. You know, the situation there is a lot more dire, and so it's like $14 a barrel higher than WTI, right? So just a bad situation on that front as well. So that's a kind of a look there, and that's a big problem that kind of highlights the problems that we're seeing. And you know, with the straits being closed, you know, 20% of a lot of the global export, you know, Europe and everything, Asia, they get all their oil basically, big chunk of it coming out, oil and oil products coming out of the Gulf there. So that is kind of what's driving the market. Obviously, everybody probably knows, but I thought this would be kind of an interesting thing to show everybody here. All right, so that's kind of an oil, you know, overview there of the oil market kind of update. Now let's take a look at market rotation. This is the next thing, and here you can see this is the heat map from Friday. You know, everything was pretty red, but the thing that really stands out is that all the mag kind of 7, all the big cap, you know, growth stocks really got pounded. And again, a lot of that was because of the interest rates were moving higher. That hurts the valuations of these growth stocks and depend on growth. And when you get higher rates, that hampers the growth, okay? So Google got hit hard, NVIDIA, Microsoft's just getting crushed. Apple was off. You can see the sectors that had a little bit of safety to them, you know, were, you know, consumer staples, Walmart, Costco, that area. And then the energy is holding up, you know, still pretty decent on that front as well. So that's just kind of a sector rotation there, just that one day. And then you can see here, this is sector rotation showing you kind of the different time frames. So here it was, you know, Friday. You can see where the big rotation was out of the information technology and also the consumer discretionary industrials. You can see all the sectors here just got hit pretty hard, money flowing out of that. The only positive sector we had was energy and utilities, you know, kind of the safety play on utilities. And then over the last month, you can see pretty much the kind of same trend or pattern. Everything's been up in energy, and all of these other sectors, money's been rotating out of those sectors. And here it is year to date. You can see again, the big area, the big winner's been energy, materials then next, et cetera. But you know, most of the money is still rotating out of the kind of the tech side of things. All right, so that shows you, you know, where the money's been moving from and into, and that's the current kind of overview there. Now, the next thing I always like to be aware of is what is seasonality doing? Right now, if we look at the seasonality of the markets, we've been in a seasonal uptrend, but you know, the current situation with the Iran-US situation here has pretty much dampened that. But typically we'll have a pretty decent seasonal uptrend in the markets when you get into that kind of the mid to late March area right there. But, you know, obviously we haven't been experiencing that right now, but these are just the seasonality continuation charts that I use. And this is, you know, based on the S&P 500, and this is the June contract. So you can see going back 5 years, 15 and 28 years, this is a seasonal pattern where we would currently be right about there. So there's a little bit more seasonal upside into April, but then you get a big, you know, not a big pullback, but you typically get a pullback, and then typically you'll have another seasonal run up into kind of July, right in here. But you know, the seasonality has been definitely water been thrown on the seasonals this year due to the situation with the crisis on the oil crisis side. So that's the seasonal there. So and here it is on the NASDAQ 100. We're currently on the seasonality side of things. There's been typically a really strong seasonal trend. You know, when we get into this kind of late part of March, all the way into that July period. Now we're currently right about here. We get a typical little pullback in April, then back up. But, you know, this has all been washed out because of the oil crisis situation that we're currently experiencing. And then here's the seasonality on crude oil, just to kind of put that one in. So we're currently seasonally wise, we're right here where that green arrow is. And typically you get a little bit more pop into April 1, and then kind of it really kind of chops back and forth. So nothing too significant there, but those are the seasonals. So I like to kind of review all of this and kind of have that as part of my process too, to know where these different things you know, are as far as going to potentially affect the market. So now let's do a kind of, you know, that top-down review I just showed you. We already kind of went through that. And so here's just kind of one more review of that. But you can see here, we are on the monthly. We've got the trend is up based on that 21 period moving average. I kind of track trend there. And then momentum, those neutral. My fast momentum is negative, but positive on the confirming slower indicator of momentum I use. So kind of a neutral standpoint on that momentum side. And then if we look at the long-term weekly, you know, we're in that downtrend, and we're in the downtrend with momentum. Cycle 1 and 2, which I measure momentum with, are both negative on that. And then on the daily, the same. So we're in a kind of a downtrend, breaking key trend levels based on moving averages. And then also momentum, we're in a downtrend based on that. So that's kind of an overview on that. Now, the next thing when I do is when I select, you know, look for swing trade setups, you know, I want it to define a lot of different things. So first off, you know, what cycle are we in? So, you know, are we in a downtrend, uptrend, sideways, or extended? Currently, we're in that downtrend based on kind of some of those measurements I just showed you. What's the current market condition? This is the other thing I want to try to quantify. And so there's always going to be uncertainty, you know, with all the markets that we're trading at any point in time, but then there's going to be degrees of uncertainty. So I like to kind of define what that is. Are we in high, low, or extreme? Now, you know, pretty much all of last year, we were kind of more in a low extreme, a low environment of uncertainty, but now we're extreme. We've got the war, we've got the oil crisis, et cetera. So extreme market condition of uncertainty. And then the market stock relative strength versus momentum. Based on momentum, we're currently down. You know, when I showed you those momentum indicators, they're all going negative now. So that's how I can measure market relative strength based on momentum, and it's currently down. Now, the next thing I always like to look at and use for selecting trades is I've got a kind of a bucket of 5 different type of trade patterns that I look for. And so we'll go through those, and then these kind of patterns then help me decide, okay, what trade setup to do and what option strategy to do with that chart pattern. And then the last thing, or the 5th thing that I look at, is your time horizon for the trade that you're looking at. So what is your duration of the trade you're specifically looking at? Are you looking for something for a swing trade or longer term, or just, you know, intraday, things like that? So you want to be aware, you know, what is your trade horizon that you're looking for. Now, before we get too much further into the workshop here today, I'm going to be doing a great special here for everybody today. And this is, based on this process that I'm going through. The alert service that I send out and I have is called my LEAP open and close trade alert service. And so this service sends out trade alerts based on 5 different types of trade setups that I look for. And I send these out, to my members by text. And so this is what I'm offering up today is a really great discount package on this alert service if you'd like to take advantage of it. So if you want to jump in and get a great opportunity to get this for a super cheap value, here's what you can do. Let me get the link for you, and then we'll go over this in more detail here in a minute. I'm trying to get my link together for you. So use this link here. Okay, so it'll be powercycletrading.com. You can see up here /special. Put that in, and then you can either click on it or copy and paste it into your browser. Put it in here for everybody. Okay, there you go. And then click on that, and then when you click and it opens up, to get the 25% off, just put in small cap alert 25, and this is going to give you a 25% discount on the normal price of this alert service. So it's a fantastic deal, and this is kind of a one-time deal. I haven't done this 25% off, ever actually. So this is what this is going to give you. This will give you full access to my alert service. I send out 5 different types of alerts that we'll talk about and go over. So you'll get the alerts for the next 5 months, 5 different types that I send out, plus 5 months to my trading club, which we'll go through what that gives you. One thing it gives you is access to my trading room. So that's a really great value. Now, the normal price of this would be $600, but if you put in the promo code there, alert25, you'll get 25% off. And so for today, it's going to be $450. And so that's also a 2-pay if you want. So if you kind of break it apart, that's like $3 a day. So you'll get the trade alerts for 5 months. You'll get then my trading club with, along with the alert service for 5 months. And the type of trades that you're gonna receive will be text alerts on selective calendar and calendar diagonals. We do a lot of those. Selective butterflies and long condors. Selective what we call pinning trades, monthly pinning trades, basically butterflies and condors or calendars on those. Breakout reversal type of trade setups. These are credit spreads or just breakout debit spreads, and then selective earnings trades. So there are 5 different types of trade alerts that I'll send out. And, there'll be 8 to 12 or more stocks or ETFs per month. And this will be for the next 5 months. And you can start and stop when you want. So if you do go, on vacation or have to take off for work or whatever, you're not going to be, hit, with, wasting your time on that. So, click on that, and then that will pull up. I'll show you what you're going to get when that comes up. You'll see this pop up. All right. And then what you're going to do is once you click on that or copy and paste it in your browser, you'll see this pull up, and this will give you everything you need to know. So here's just kind of a summary of the performance, so you can kind of get an idea of what the alert services have done and what they offer you. So here we are currently just year to date for 2026. We're doing pretty good. I mean, if you consider the market we've been in, all the confusion, all the stuff that's been going on, we're running at about 83% win break-even rate. So we've had 35 trades closed out so far for this year, 24 of those winners, 5 break-even, 6 losers. So really nice win break-even rate on that, over 80%. Again, these are unaudited, but this is kind of a summary just so you can get an idea of the type of trade and the success so far of these alerts. Now, here it was for 2025 for the full year. We had a win break-even rate for the full year of 79%. We had 151 trades closed out, 101 of those winners, 19 break-even, 31 losers, unaudited. And then since inception, from when I first started the first alert that was going out was back in May of 2018. We're still running about 79% win break-even rate. So pretty darn good, performance over that period of time. So it's a pretty long period of time, actually. So we've had 1,001 trades closed out, 711 winners, 78 break-even, 212 losers. These are, unaudited results. So that's what you're going to be looking at. That's what you would, get continuing on. Hopefully we'll continue that. But with the service, you'll get the, either there'll be calendars that I send out or calendar diagonals, butterflies, condors, breakout kind of credit spreads, or monthly penny trades. So that's kind of what you'd be looking at there. And we'll go through this more detail here a little bit later. But also then you get access to my trading club for the next 5 months as well. And this gives you access to my virtual trading room, which is open from Wednesday through Friday during the week, 9:30 Eastern to 10:30. Then we do a live Q&A every week, usually on a Tuesday, live and recorded. So you'll have that to kick the week off. Do a daily aftermarket video newsletters every day after the close. So you'll have that access for the next 5 months. You'll get a trading video archive. The videos are archived. I have what I call my trader educational vault. And so you'll have a lot of good educational material in there for members. And then anything on my website, you'll get a 50% discount. So everything here today, normal price would be, if I did this for the 5 months, would be $600. For today, it's $450 for 5 months. And just come in here, click on that buy, and you'll see everything you would get, when you do purchase all 5 alerts, 5 months, Trading Club 5 months. Put in that promo code. Make sure you put that in small cap alert, LEART 25. There is a promo code here that kick that. And then if you did want a to pay, you can click to pay to, reduce that and do 2 payments. And if you do want my directional trading indicators that I'm showing you today that I use, you can add those to the cart here just for an additional $195. All right, so that's just kind of a real brief overview there, and then we'll come back to that, if you have any questions down the road. So let me just pull that back off, and let's move on. So make sure to, here it is again, George. So use this link, Power Cycle Trading. Well, first off, here's the alert 25 small cap, and then use that link here. I'll get it for you one more time. So powercycletrading.com/special, and that will give it to you. That special link for 25% off will pop up. So here you go. Okay. Now let's go through steps 1 through 5. So this is, going to be how I go about setting up to identify market cycles and market conditions. So this is going to validate a stock's relative strength. And then we want to look at what is the time horizon we're setting the trade up for. So first off, what is the market cycle? Well, based on my indicators and those things that I just showed you, based on momentum, based on tracking trend, based on moving averages, we are currently in a downtrend. Now, when I am setting up trades and the tracking trend and things like that, I use 4 moving averages primarily. And so I'm going to use my 8 exponential moving average, the 21 period exponential, the 50 simple, and the 200 period simple moving averages. So these are kind of the 4 key moving averages that I constantly follow for these type of trade setups. All right. So the next thing is, what is the market condition? So there's always, like I said, there's always some degree of uncertainty in the markets that we're trading. We never know what's really going to happen, right? But right now, the market condition uncertainty is extreme. We're currently, in a war, which hopefully doesn't escalate and go further. We're all hoping this thing ends soon. And that's created this oil crisis, which is the worst we've ever seen, which is really bad. And what is that doing? Stoking inflation, so global inflation fears, and that's really what it's all about. It's the oil crisis creating this inflation, outcome, which is really bad. Hopefully we'll get it under control, but the longer it goes on, the worse it gets, because the production has to be starts to be locked in, because the storage tanks and everything in the Gulf start to fill up. they have to start shutting in production because of that. And then they've had some infrastructure problems as well. So right now, that's where we are, and the inflation is, not looking too good based off that. Now, the next thing is really a key thing that I always use is momentum. So when you're trading in, any type of market environment, it all comes down to price direction, timing, then managing your risk. So if you look at all your trades that you've done, winners or losers, you're probably going to always notice there's some characteristic that stands out. So typically, if I look back at my winning trades, typically I'll always maybe get direction right, or my timing entries and exits were right, and that created that winning trade. So if you get these off, that's a lot of what's going to attribute to the loser. So you want to be able to have good price direction, with your trades. So that's where this momentum really helps to do that. And it really helps on your timing, your entries into the trade or your exits out of the trade. And then the other part of any good trade setups is managing your risk after the trade is put on. All right, so these are the kind of three things I look at. Now, the best then trading tool that I've found for signaling this kind of price direction and market timing comes off of basing these direction off of what we call momentum and momentum flows. So that's where I've developed these momentum indicators, and what they do is they measure price strength or weakness. And when you're doing that, measuring strength and weakness across multiple time frames, that's what really sets up kind of a dynamic trend indicator to follow. And so what this then does is that it helps me to identify price trends earlier before the market sees them a lot of times, because we're following the momentum, pushing the markets either up or down. So this really helps you to identify a trend that's potentially coming up based on that momentum shift. Then what it does is, if you're having good positive or negative momentum across multiple time frames, this validates a strength or weakness of a trend based on its momentum. And then this will then help you if you've got a strong momentum, either up or down for your trend trade. It'll help you to stay with that trend longer based on that solid momentum that you've got in the trade. So that's what I'm always looking at. So I always kind of follow. I'll tell my members or whatever to follow the momentum. So here I'll just pull up a real quick example here. If I can pull this chart back up here, I'll show you. So here's, for example, follow momentum. Well, so you can see here my momentum indicators. I'll put on SPY. You'll see they're going to be negative, right? So this is, when it's below zero, it's negative. So right there, zero. And cycle one, the way that my indicators work, they're measuring momentum, and this cycle one is a really fast momentum measurement. So it's going to happen first, and then I'm going to confirm the momentum on this cycle one, the fast momentum, with a slow momentum measurement. So this helps me to keep from getting chopped around in and out of a trade, by just using the fast momentum. So it smooths it out. So if you look at momentum here, cycle 1 and 2 are negative. Follow momentum, it's negative, it's down. So the reverse of that obviously would be positive momentum. So here's an example. There are not a whole lot of examples, but here's a good one that we've got, and we currently still have this trade on. And this is positive momentum. This is Schlumberger. So we're actually still long this trade, which we got into right here last week. And so you can see the momentum on this trade on Schlumberger is positive. So here, cycle 1 went positive. That's your fast, and then had confirmation of that about a day later. And then look what happened. Up she goes. Okay. So that's what I say. Okay, let's follow the momentum. Then we can do this on, whatever time frame that we're working. So what I like to do is have multiple time frames supporting that same momentum. So if we look at the 20-minute momentum, you can see now it's neutral, starting to stall out a little bit right there. And if I look at, so let's say we go from a daily, I'll drop it to a 4-hour positive momentum. 4 hours still positive. So then you can see I drop it down to maybe the next time level increment, 2 hour. Now we're starting to get neutral. All right, so this could be starting to top out a little bit, right? We're starting to lose a little bit of momentum, but overall, we still have positive momentum. So that's what I call follow the momentum. That's how I select the trades, and then I manage the trades based off momentum and what they're telling me. All right, so that's a really key ingredient. Now, the next thing I always look at as part of the trade selection process is the chart patterns. Okay, so this gives me some really good high probability trade setups based on chart patterns that I've kind of defined and that then I look for. And so I'll go through these patterns that I use. There are 5, but the kind of one of the key ones that I always like to identify within any of these other 4 is what we call the volatility compression squeeze. So that's a pattern that can also be within these other 4 type patterns. So we'll go through that. I'll show you some different examples and then how these things work. So first off is the volatility squeeze or compression squeeze breakout kind of pattern. Now this is the compression squeeze pattern is identified as a period of price consolidation. That's when your price is coiling in a really tight range pattern and then has an explosive momentum breakout out of that pattern, either up or down. So when you have a stock or security, whatever it might be, with multiple time frames, so like maybe it has a daily squeeze, a 4-hour, 1 hour, whatever, when you have multiple time frames in a squeeze, these breakouts can be a lot of times even more powerful with greater follow through. So kind of like a chain reaction, the one time frame sets off the next, and you have a huge, big positive move up or down out of that squeeze pattern. So this then sets off everything, and it's a great setup for your swing trades or even your day trades. And this is what gives you that big timing edge, which is another big part of your, winning trades. If you go back and look, you're going to see, hey, I got a great entry on this trade, or I lost on this trade because I got a bad entry, things like that. So it's a really key part of your trade, dynamics is to get good entries, good exits, and this is one thing that can really help with that. So here are a couple examples. This is just a Netflix to show you the different squeezes of the pattern. So here it was, this daily time frame squeeze. So you can see it right here. You can see how tight that is. And these dots are what I've put together to code into my trading indicators to define the squeeze when it starts and when it stops. So you can see just how it's coiling here. Now this is where you follow the momentum. So you can see here, momentum cycle 1 and 2 are up. All right, so that tells me that the potential direction for a potential breakout would be to the upside. All right, so that then actually it broke out to the upside. Then you can see momentum started coming back off. It comes back down, and then we have another squeeze here. Again, cycle 1, 2 go positive. Which way did it go? Broke to the upside. Then again, momentum starts to stall off right here. So what does it do? Mean reversion back to the 21, or sometimes it can break even more, right? But it shows you that it's starting to stall out, exhaustion, buyers are starting to dry up, pulls back, and then another squeeze here, consolidation, momentum cycle 1 and 2 are up she goes. So that's a really good example of the different squeeze breakouts and following that momentum for that breakout. Now, the patterns, here are the other 4 patterns. So this is what I call the cycle low reversal. This is a favorite pattern. This is when you get the big sell-off here, like we're currently starting to establish this kind of sell-off where we're just broken below the 21 exponential there, the 8 exponential, and now we're just hugging the downside, the extreme range bands, and just chopping up and down between the 8 and my extreme range bands. And then finally, what typically happens every time is the same steps over and over. The first thing that will happen, we get this cycle reversal. This is an indicator I use that signals that there's a potential change in cycle coming, or it's a signal. It doesn't trigger it, but it's a signal. So that gives you time to set up, start watching, and then the next part of the process is cycle 1, which is your fast momentum. Step 2, it'll go positive, which it did here. And then I want confirmation, step 3, with momentum 2 right there. And this is another indicator I use, momentum upside cross there. And so then it was, back up. So that's a cycle low That's when everything price is broken down below all the key moving averages and then turns back up. Cycle low, reversal. All right, so that's one pattern. And with this kind of pattern, then I will look at what option strategy to go with it. We could use debit spreads, we could use a butterfly, long condor, calendar diagonals are all the types of option strategies that could apply to this kind of pattern. All right, so that's another part of the steps involved. Now here's the cycle low retracement reversal. So this is when price comes down and retraces and bounces off a support level. So, you know, the cycle low reversal is where it comes down below all the key moving averages and finally turns. This is when it retraces off a key moving average. So in this example, this was gold and it came down on the weekly long term, it came down and started to cycle and move back off that 200 week right here. All right, so it consolidated there and then broke back up. And you see there's also a squeeze. And what happened here? We had the cycle reversal. Step one, step two was positive momentum. Step three, positive momentum confirmation, breakout to the upside. And here it was on the daily time frame. Here's the 200-day. So consolidating above that, gets in a squeeze from that consolidation. Cycle reversal here, cycle 1 and 2 go positive, a breakout then happens after that. But that's you know, a cycle low reversal, and that's also with the volatility squeeze in that. So that's a really great pattern to look for, that I like to look for. And again, with this pattern, I'll use either debit spreads, butterflies, long condors, calendar diagonals, depending on the duration. So if I want something that I think might trend longer, typically we're going to go with a counter diagonal. If we want to trade to get in and out of pretty quick, you know, we're going to go with the debit spread. So we, you know, have a short trade on right now with the Russell 2000 and use the debit spread because it's going to be a quick in and out trade. Now, if we were doing a longer term trade like we did with Schlumberger, we did a counter diagonal. So we'll go over a few of these and I'll show you. Okay, so this is how I kind of match the chart pattern, the option strategy with the chart pattern that we're trading. Now this is another pattern called the cycle high reversal. This is kind of where we have been, where the markets are trending up, trending, and just they keep trending, and finally they start to run out of buyers, they pause and they stall. So this is cycle high reversal. So this is where you start getting up to the top end of the range, they get overextended maybe, and you start seeing buying exhaustion, and then you get a reversal. So here you can see my cycle reversal indicator kicks in. Momentum cycle 1 and 2 start going negative, and then we had that pullback, you know, off that high. All right, so that's a cycle high reversal pattern. And here is, I'll show you an example, a current example here. Let me pull up, I'll just show you the reversal. Let me pull this up real quick. This will show you. Let's put in SP. Let's put in QQQ. So here's my cycle reversal. This on QQQ, you can see it right here. So here's my first signal alert to a potential change in cycle. Came right here. This was back on January 30th. Okay, we had a cycle reversal here. We did have a pullback. It held. Here it is holding the 150 period moving average. And then it started drifting lower, and then, you know, momentum kicked in. So you can see, you know, you can see just this progression of what happened. And this is what happens with anything that you're, you know, trading using these indicators. So here you can see that progression. Here was back in January, and then it just started to kind of progress lower and lower and lower with everything, momentum really starting to fade. Now I'm also using different time frames. This is just a daily to kind of show you how that momentum started to fade here. So here it was back, the first indication was right back in here, back in, this was back in March. So you can see it got back up here to That's the 2 hour. Let me put on the daily. So here's a volatility squeeze right here. See that compression? And then what happened? It broke that key support. And what was momentum doing at that time? Momentum was giving us the indication that the direction of that break was going to be down. See that consolidation? And then what was momentum doing? Negative. And which way did it break? Broke to the downside. So that's those are the tools that I use for these trades, and then managing the trades, once we are in those trades as well. So that's the cycle high reversal daily. And then here's the cycle high retracement reversal. So this is where you get a price movement, from you had a downtrend and you get a retracement back up into a key moving average and it starts to fail. Here's just an example on XLK. It gets up here, that's the 200-day moving average. And then we have the cycle reversal up here and it stalls out, momentum shifts, we have, starts to stall, buyers start to dry up. And then what happens? Potential downtrend. A lot of times it could just turn sideways, but this is where it first starts. So that's the first start of potential sideways to downtrend kind of, trend setup. And with this kind of pattern, one of the first things that I like to look at, maybe we do a call credit spread out of the money, or debit spreads, butterflies, condors, or calendars again. But in this situation, we would do it for downside moves using puts. All right, so then those are kind of the patterns. Now, the next step, 6 through 9, is the scanning process. So this is a couple of different scans that I do to find these trades that I send out to the alert service. And with these scans, this is how I find all my trade setup. So you'll see this is the current scan that I did on Friday. These are everything that's currently on Friday that was in a daily volatility squeeze. So there's quite a few things that are in a squeeze, but the scanner then helps me to pick out these types of trades that are in a daily. I can do daily, 4 hour, or weekly. All right, so this is kind of what popped up on my scanner. And then with the scanner, it'll tell me how many days this has been in a squeeze. It'll tell me if the momentum's up or down. So I've got it color coded for that. So you can see, just for example, HPQ, this had been in a squeeze or still in a squeeze for 33 days, 33 bars. The momentum indicator is showing that the momentum is actually up. You can see here some other examples. Here's PayPal. It's been in a squeeze for 7 days, negative momentum, so potential downside. So this is kind of where I find the watch list, and then I can drill down into it, and we can go through and look at a few here in a minute. So that's just a volatility squeeze. And then the other place I find, these are what I call my reversal patterns that I look for. So this is my watch list scan that I did on Friday of upside reversals on a daily time frame. There's not much. This is the only thing. These are out of the universe of all the different stocks that I scanned. These are the only stocks that came up. There's 3, 6, 7, 8. Only 8 stocks on Friday came up after this upside reversal scan. ETR, FUL, KNX, Target. We'll look at these here in a minute. Not many, okay? But then I did a scan for a downside reversal, and look what popped up. Huge list, right? Airbnb. You've got AMAT, just a huge list. So there's always a lot of different trade setups that we can look at. So that's just kind of a list of the different trades. So where I find the different trade setups for the alert service. All right, so that's kind of where I put together the watch list there. Now the next, step 10 to 13, are the trade setups, and then the option strategies used in trade management. All right, so this is where I come into the lead, open, and close alert service. So these are trades that have been sent out to the alert members, and this is what we'll go through next to show you kind of that process that I just went over, selecting the trades and how that sets you up for some pretty high winning probability trades. So the goal of trading then is, in my opinion, is to have more winning trades than losing trades, since it's impossible to have all winning trades. Now, you could, be successful if you, had that one huge winner and you could have everything else, losers, but that one winner makes it. But I like winning trades. It just helps your confidence. It just helps you psychologically. So I'm always looking for tight trades, really good entries, really, good setups, clean setups, and then applying good option strategies for risk. So this helps to keep that high winning percentage of trades. So with this reality in mind, the performance to date of the trade setups, which have been sent out through this service, have been actually very remarkable if you think about it. So with these alerts, when they're sent out, I use a text alert program called Telegram. So it's a platform, it's a free app, and these alerts go out within seconds. Okay, it's a great app. And so here, a couple examples. This was on Friday. So you can see here, it says profit take, the Russell short. So we had a IWM, we did a very short duration trade here using a debit spread, which I talked about a few minutes ago. So we did this super low risk trade because we designed it to be out of the money to make it really cheap. So this trade on Friday went out into the close. You can see here it says profit. It says profit take into the close. I sent this text out towards the end of the day. This was about 247 right there. And it says trading around 242.55. If long, this spread that we set up this week, the 30 March 239 put, 235 put debit spread on this move lower, look to lock in some profit. It was currently at 48 bucks. All right, so that's just kind of an example of what you'd be receiving, and this would be using this text alert service, Telegram. So let's take a look at some of these trades that we've just done recently, and these are the trades for so far for 2026, and still doing really well there. 83% win loss break even win break even rate there currently. And so again, these are unaudited, but the kind of a summary of those trades. So and then here it is for year to date 2025. For 2025 we were running at 79% win break even rate, and then since the start of the first alerts that were sent out back in May 2018 through Friday, running at a 79% win break even right there. So unaudited. So we've had really good success, and it's based on this selection process that I kind of guided you through here earlier. And then the next part of it is the trade setups, and then applying the right option strategy and managing those trades. So here are a couple here to look at. These are a lot of these trades that we do are calendar and calendar diagonals, because we can make these kind of what I call flexibility trade. We can make them a little bit longer term if we want. And then based on this option strategy structure, we can do a lot of adjustments to stay with the trade, manage the trade, and increase the potential profit based on the way we adjust. There are a lot of different things that we can do with the option strategy, which is kind of one of my favorites, the calendar diagonal. So with this part of the service, we've done the most trades with this strategy. Okay, so currently, since starting these types of trades back in June of 2019 through Friday, we've had 410 trades closed out, 290 winners, 31 break even, 89 losers, win break even rate 78%, unaudited. So that's a kind of a result summary there. And then here's some trades that we have done, and currently we still have this trade on. So this was one that we just set up on Schlumberger. And again, remember, this is through all this crazy environment we've had since the first of the year. So we're running 83% win break-even rate, and this is a pretty difficult market to trade right now. So really happy with the results that we've had so far. So this trade we set up on the 24th. So that was, what was that, Monday? And we had, this was on Schlumberger. It was trading at 50.40 when we set the trade up. Okay, so this is Telegram. This was sent out to all the alert members, and it says here new, so you know what it is, Schlumberger long. Yeah, hold on, Janice. Yeah, let me give you the link there. 1 second. Yeah, use powercycletrading.com/special, and then make sure you use small cap alert LE ALERT 25, and you'll get the 25% off. And again, you can stop and start the alert service when you want. All right, so you've got that flexibility. You can do that. So you're not going to be, timed for. If you go up, again, if you're not around and you want to put it on pause, you can do that. So you're not going to be penalized on your time. Yeah, okay. So put in that link and then put in that promo code there, alert 25. All right, so when these are sent out, new Schlumberger, and I also have a cheat sheet that tells you exactly, what all this stuff means, so you're not confused. It might be confusing at first. So this is just a good example. New Schlumberger long. So this was on the 24th last week. It was trading at, when we set the trade up, when I sent it out, it was trading at 50.40. And then I give a kind of a brief description of why, I'm doing the trade, so you can have an idea of that. And then after the market close on that day, I'll give you a video update on why the trade was done. So here it was, daily cycle low, retracement reversal. Okay, here's that pattern. Let me pull up the chart here so you can see that. 1 second, I'll show you. I'll just kind of walk you through this trade actually. So here it was, this was a, right, so here is the Schlumberger, and this was the 24th. Now, what you're going to see, here's the perfect entry was the day before, but with all the market craziness, I wanted to wait one extra day because we were pushing into, here's the 50 simple moving average right there. This is the key moving average, the 50. So whenever you see a 50, if you can break it up or down, that usually you're going to get some pretty good momentum off of that. So here we were. So you can see. So first off, you see that magenta arrow there? That's my cycle reversal. See that right there? So this is an alert to potential cycle change. Let me just kind of back up and I'll kind of show you in real time what this was kind of looking like. Okay, so here it was. Here was Schlumberger. Here, look, here's a volatility squeeze, right? See? And then it pulls back. My momentum indicator, cycle 1 and 2 are going negative right there. And then this is what, this is another indicator I use, is what I call momentum downside, momentum cross to the downside. Look at that. Breaks down, breaks the 50, comes back up to the 21, breaks down again. Looks like it's going to have a bigger move down. So then it starts to, you can see momentum, the histogram starts to come off the extremes, right? All right, so watching that now. Here's the cycle reversal. See that? So that's an alert to potential change in cycle. That's not the trigger, that's just an alert. But then look, cycle 1 goes positive. That's my fast momentum. So now I'm really watching this thing. I've got this on my watch list. I'm watching it. And then here's the next day, still negative on cycle 2, doing nothing. That's on the 20th. Here's that 50 simple moving average and bounced off that, right? Here it finally breaks. The next day, that's the 20th, and then on the 23rd, that's Monday. Okay, right there. Look at that momentum upside cross, cycle 1 and 2 positive. This would have been the perfect entry right there. That's what I call my trigger entry. So 48.80. Well, we waited till the next day, and and we got in right here as it was breaking above that 50. All right. And it was based off those indicators that kicked in the trade, right? And then it started moving up. So momentum, and this was see the cycle low retracement, that's the 100 period moving average right there. So we got into the trade, and here's just kind of the progression of the trade real quick. So, I send a lot of updates too. So these are just a few on this trade. There's been a bunch, but here it was. Then on Friday, it says, profit update, Schlumberger trading now at 52.84. If you're long this spread, the 10 April, long the 50 call, short the 27 March, that's for expiration Friday, right? The 54 call, make sure you locked in some profit. At that point in time, this trade was up $115 per spread. So it's doing really good. We'll look to adjust. Okay, so then I'm saying, okay, be on the watch out. We're going to probably adjust. So then we did adjust. I sent out an adjustment alert, to all the members. This was actually at 9:35, and then just about 5 minutes later, then we did adjust here at 9:44. So now it was trading adjustment Schlumberger, trade around 52.89. So then if you're long this spread, right, make sure you locked in some profit, like I said earlier. And now it was currently up $151 a spread. And then here's the adjustment. So it says buy to close the 27 March 54 call. We were short that, or let expire worthless. We're going to take some profit on that. And then I say watch it into close. Make sure it closed below that 54. So, you're not going to get exercise, which it did. And then the second part was to sell to open the 2 April 56 call. So we rolled the short strike up, and now we're still long this call calendar diagonal, but we're still on that 10 April 50 call, but we went from we were short originally the 54 call. Now we roll to the next series, the 2 April, and now we're short the 56 call. So we widened out that spread now to $6 wide. And we've got really good profit in the trade as well. And so then here it was the profit update going out at the end of the day. Here it says profit update. Now it's trading at 53.42. If long adjusted 10 April 50 call short the 2 April 56 call, currently up around $200 per spread. All right, so that's what you can look forward to getting. I'm constantly updating these things, and so you're not going to be out there hanging. And so here was the trade setup, beautiful setup, got in right there, and then we profit there. Now I've also got this is what I call my price target mapping. We got our next target right here to this area. That's a Fibonacci extension 1272 coming in about 54.82, then potentially up to 57.80. So here was our first area of profit here on the original trade was right here. So this was the original trade, the 10 April 50 call long, short the 27 March 54 $4 wide spread. That spread cost us $2.05 or $205 per one spread, right? And so now, on the 27th, it was trading at 52.95 right there. And at that point in time right here, that spread now went from 205 to 356. So it was up $151 per, if you did one spread, 74% return. But it got better after the adjustment the same day, but a little bit just 10 minutes later. Now at the end of the day, the way we had adjusted the trade, now it was up a lot more. So we now had this trade 10 April still long. That's our long dated duration, 50 strike. But now the 2 April and next week out 56, and we adjusted our price down to $1.79. And now it was at 380. So this was up $201, $112, 112% return. And this trade has a lot more potential for it. What the trade plan is for this trade is to probably adjust this to what we call a condor, and I'll show you, what that looks like here in a minute. So now we've got this trade adjusted here, and if we were just to sit with this trade and do nothing, and it went to $56 next Friday, this trade will be up $425. See right here, that teal, that's what it would be at expiration. All right, so it's currently, went out up about 193 right there. So it went out at 53.50 right here. So good looking trade. And then next week, what we'll do, if we're still trending, we'll close out the 2 April 56 short, and then we'll roll to the 10 April. We'll make this into a call debit spread or condor. All right, so that's, kind of what you can expect there. And then you're going to also learn as you go how these trades work, because you're going to be following along with me on the trades. So that was a really cool trade. Now here's another couple of other ones. Here was another one we did. This was W day. This is what I called an aggressive long put calendar diagonal. Okay, so we set this up on the 11th of March. It's trading at 138. It's a short trade, profit on the 16th. This thing was whipping around. This market's been whipping around, so we, keep tight stops on these types of trades. So we got in on the 11th, got out the 16th. Now it's trading at 134.20. So you can see it move down. And this was what I call an aggressive trade because I base this off the 4-hour time frame. So it says new W-day aggressive short. This is one I picked up on my scanner. And so we shorted this and it was trading at 138. Daily cycle high retracement reversal. Okay. And then negative momentum, downside momentum cross. I give you the targets, know your risk, buy this trade. So this was the 27 March, 138, 128 at 455. I'll say around because, sometimes you get it better, sometimes it might be a little worse. And then here it was on the 16th, profit stop. Okay, so this one we just wanted to get out. Markets were just, moving back and forth too much. So we just want to grab the profit, lock it in. So we just closed it out. And make sure you locked in your profit, hold a break even stop on any balance if you want to do that. It was currently up 122 bucks on that trade. All right, so that was the W day in on the 11th, out on the 16th. So we got in right here, short trade. See how it came up here, started to fall apart off that 21. We had a momentum reversal here and out there. That was that trade. Here's the risk profile, the trade on the calendar diagonal, put calendar diagonal. So trade right there on the 16th, 134.12. Original trade set up 455 bucks on the spread. Now that spread had blown out to 495. So we're up 140 bucks, 31% return on our risk of that debit paid cost of the trade. Here was another one that we did not too long ago. This was on Palo Alto. This was another what called aggressive long because it's based on the 4-hour time frame. This was a really nice trade set up. Got in at 157.50, and then we did an adjustment on the 5th and out the 13th. All right, so let's just kind of run through here pretty fast. But here it is, a new PANW aggressive long off the 4-hour time frame. Here's where it was trading around, daily cycle low reversal. Okay, came down. Hard down, push back up. I'll show you that. Let me show you the trade. This was a daily cycle low reversal. Let me pull that up. Find it. Feel free to ask any questions or if there's anything you want to look at as well. On my chart. Okay, here, let's take a look. So this got in the March 4th, Palo Alto. So Palo Alto, look at this, just got crushed. Look at that, man, ugly. So break back below that, sold off hard. Now here you go. Here's where it starts to form a bottom, which didn't hold, but here it is, just kind of going through the progression here. So here's cycle reversal. See that right there? Okay, alert to a cycle change. Then we had momentum cycle 1 go positive right there where my arrow is. Then we had cycle 2 go positive here on the 3rd and breaking that 21. Okay, now it's coming up. That's the 8. And then breaking that and here's where we got in right there. See that? There it was. And see, this was still negative. So this was off the 4-hour time frame, basically. And so got in there, and then this thing ripped pretty good. Ended up getting out, I believe, the 16th. Let me see here. I believe we got out the 13th. We got out right here. Yeah, right here. See that? See, and this is the other thing I'm looking at. This red, that solid line, that's the 50 simple moving average. So again, I'm looking at this trade. I'm knowing that, okay, 50 simple is a big moving average. We got here, went ahead and closed it out. Momentum started to shift down. went in and closed it out, and look what happened. So these are the things you'll get from the alert service. Instead of you having to do it, I'm doing it for you, right? All right, so that happened on the 5th, and then we're out on the 13th. All right, so that's went from 157, and then we're out on on the 13th. Now this one, we did an adjustment on it. We adjusted this into a long call condor. All right, so this gave us a really good low risk trade. And look here, when this trade was taken off, we did this adjustment into a condor. So here it is. It tells you profit update. Here it is. So adjusted. Here's the trade. Adjusted 13 March 160 call, short 13 March 170 call. So call debit spread. And then as the other part of the trade, now short the 13 March 175 185. So this is what we ended up trading and adjusting it into. This is called a condor. And so this trade, look at this, currently up $805 per spread. This was up over 1,200% return. So that's what you can be looking for in these types of trades. That's what we try to achieve, okay? So got in here. Out here into that 50, and here's the trade setup. So the original trade was this setup here, where we were long that 13 March 157.5, short the 6 March 165, $3.80. Now that spread at that point blew out to $691. So we were up $311 on this calendar, 82% return, not bad. So went from 128 up to 163, but we did the adjustment into the condor, and that's where it really made a lot of money. Because what we did here, see, we had this, see, we're long the 157.5 call, if you notice down here, and then the market went up. So we had a lot of profit in that 157.5 call. So what we did, we sold it, closed that, took a big profit, and then bought to open above it, the 160 call, and this is how we made so much money. So then we ended up doing this adjustment, and we rolled up the spread from 157.5 to 160. So we had that call debit spread now like this. And then when it moved up, we sold an out of the money, way out of the money, 175, 185 call credit spread over here, brought in some premium, reduced our total cost of the trade to $65 per spread. And then you can see the potential, if it goes out here between the spreads, would be for $935 profit or 1,400% return. Now we made pretty close to that, but anyway, that's what I'm always looking to adjust to, something like this. And so it went out, we had our final profit take right here, on the 13th of March when it was hitting that 50, just went ahead and got out. So what, from 128.10 to when we blew out the last part of it, 169.88. So the spread we adjusted into was this condor for 65 bucks. Now that spread condor had blown out here to 888. So we had $823 per spread. So if you just had one of these on, you made 823 or over 1,200% return. How time sensitive are these alerts? You want to get them on as soon as you can. Sometime, I mean, I don't put them out there because timing is critical on the good entries is what really a lot of times helps. Now, sometimes, they'll pull back and it varies, but, you want to try to get in, I'm not putting these out there and to say, okay, you've got a day to put this on. These are, kind of, you need to enter these trades as quick as you can, and sometimes, you can wait, maybe it pulls back a little bit or whatever, sometimes get in a little bit better. But my entries, when I send out a trade, the execution, they're pretty precise. My trade setups that I send out are very precise. All right, so there's where that went out. Here's another one we did not long ago. This was on Dollar Tree. This was a long call counter diagonal. So this was into the 17th of February, was trading 128.10. and then we had adjustment and profit on the 20th, and then also final out of the trade. It was traded at 134.10. And so here again, here's the new Dollar Tree long trading here, weekly cycle low retracement reversal off 21. Okay, broke back above the 50. Daily positive momentum, et cetera, et cetera. Here, I'll give you my price targets I'm looking for initially. And here's the initial trade buy, that diagonal, 27 Feb, short the 20 Feb, 128, 134 call at around 350. And then the next day, giving you another update, profit take update. Here's trading out 133. Says take some profit. Make sure to lock in some profit. Currently up now $165. And then here we are on the 20th. Adjustment. Here's where we did the adjustment. So if long this trade, the 130, 120, 137 call spread, we had just already done one adjustment to make it a call debit spread. Then we added a credit spread to it, and this adjusted us into a long call condor. So now we're long the 130, 137 call debit spread, and we added to it short the 138, 145. And now we had a call condor, and here it is, finally, profit take DLTR. Now it's trading at 134.10. If long the adjusted call condor, here it is, 130, 137, 138, 145, currently up around $373. And now we had adjusted this to zero risk. Okay, so really cool trade setup on that. So these are, we do these a lot of times, we'll be able to adjust. So here it was on the entry, did some adjustments. Here it was, the final leg out on the 20th. Again, same indicators, everything the same. Reversal indicator. Here's found this on a scan. Step one, potential cycle reversal. Momentum solid cycle 1 and 2. We got in here that breakout of the 50. Boom. 50 key simple moving average there is very key. And here was the kind of the trade, so you can kind of see the progression of it. Here was when we originally set it up with this call counter diagonal, long that 27 Feb 128, short the 20 Feb 134, 345. Just on that, this went from 345 to 511, so up $166 there, 48% return. But then we were able to adjust this into the big adjustment to a call debit spread right here. This actually, I don't have the condor part of it, but anyway, this was a beautiful trade into that condor. So that was the trade set up there. And here's just one more just to show you. This was Chevron. This was back on the 8th of January, and did some adjustments. This one also into a long call condor, and then out of this on the 23rd, it was trading at 167.5. So again, this trade was originally set up as a long calendar diagonal, and then we did some adjustments. I kind of won't go through all the stuff, but we were able to adjust it into this long call condor. Here it is right here. It says trade at 165. If long the adjusted 160, 165 call, adjusting this. So what we did here was we bought to close the 165 call, and then sold to open the 167.5 call, and then sold to open the 23 Jan 172, 180. So we adjusted this trade to a long call condor. Here's the final adjustment. Now along the 160, 167.5 call spread, we moved this everything into this this 23 Jan series, and then sold against that the 172, 180. So we had another call condor here, and were able to adjust this into, I believe, a trade with zero risk. Yeah, this was really cool. So we had here it is on the 23rd. It says trading here said expires today. If long the adjusted call condor, et cetera, make sure you have locked in some profit and hold balance in the close. Max profit will be on the close if it closed between 167 and 172. Currently up $700 on zero risk. So that was your Chevron trade. This was a beautiful trade. Got in right there. Beautiful trend up. Original trade was that call calendar diagonal here. So that was on the 9th of January. It was trading 162.20, the original trade. This trade was up nicely, up from 244 where we put it on. Now it's at 470, so we're up 226, 92% return. But with the other adjustments done to it, we adjusted into this call condor, where now we had this trade on for zero risk. So now this is what we're in, 160, 167.5 call debit spread, and sold against it the 172, 180. And with all that adjustments, we had zero costs in the trade. Actually, we had a credit of $2. So if it goes out here, this trade would make 752 bucks, zero risk. And that's pretty much where it went out, right there. So right there it went out 173. So it blew from 2-cent credit to 731. We're up 733 bucks, max profit right there. Now this is one that we did. This was a a trade that we set up on a Apple, which was originally also a call condor, but this is kind of what I call opportunity of hedge risk management, where we adjusted this one into a free trade as well. So here's the butterfly setups that we've done. So started the butterfly alert service part of the alerts back in May of 2019 and through Friday, where we've had 246 trades closed out, 174 winners, 22 break even, 50 losers, 80% win break even rate here. These are the lowest typical risk trades that we'll do, but with the potential highest rewards, sometimes you can get up to 20 to 1. But anyway, these are very selective because these are really tight trades. In certain situations we like to do them. And so here's one that we had set up on Apple originally as a call calendar diagonal, but then adjusted this into a free trade into making it into a long call condor. So I'll kind of go through it quickly, but here it was, the text alert sent out, you Apple long. And then here on the 5th, we did an adjustment, I believe, yeah. Okay, and anyway, I'll just kind of go through and then show you what we ended up with on this trade. This was a beautiful trade as well. Got in right here. Again, same, if you look at the steps here, so if you don't look at the name, it's always the same. Step 1, cycle reversal, momentum, 1 and 2, got in here, breaking at 21, adjustment here, out there. So we ended up adjusting this into this long call condor. So now from the counter diagonal, now we adjusted this into 167.5, 280 call debit spread. And then the other part of it was short, the 187.5, 300 credit spread. So we had this on at a $1,250 wide spread. So this is a super wide trade. Our cost we had adjusted down to 75 bucks. That was our cost. Now, if it went out in here, potential profit was going to be per spread 1,175 or over a 1,500% return. And it was pretty close. So this ended up going out up $919 per spread, 1,225% return on this adjusted trade. So adjusted 75 debit, spread then was 994 going out right there. Really beautiful trade there. And then a few others. These are another things that you'll get from the alert service. These are really fun. These are very, very selective. And these are just a couple examples of pinning butterflies that from time to time I'll find and I'll send out to the alert members. So this is one that we did on GLD. So this was a long call butterfly pinning trade, spread trade. This was on like the 3rd. It was trading at 387.90, and we were looking for a potential at expiration for this to go out around 400 bucks. So this is what we call a binary kind of a pinning trade. So here it was, this very selective new long GLD long call binary called Butterfly. It was set up as trade at 387.90. Trade set up to play a potential upside move to 400. Good probability based on high open interest on the 19 December 400 strike for a move and a potential pin at that 400. All right, so set this up for, like I said, okay, set this up for around $25, 25 cents, 25 bucks. And so here it was, they have set the trade up. Here it was then on the 19th, day of expiration. Now it's trading here 397. I sent this update out, and it was, you know, I said take some profit if you can, whatever. Currently, this trade was up $135 per spread, 540%. And then later in the day, right towards the end of the day, now it was trading at 399.80, almost to the penny, very, very close to that strike of 400. Now this trade was up $306 per spread, over 1,200% return on this pending trade. So got in here. Here it was at expiration, right close to exactly where we wanted to be. And this was doing it, targeting that 400. So 396, 400, 400, 404. So $4 wide spread, cost of the trade, 25 cents, 25 bucks. If it pinned perfect, you make 375, 1,500% return. This one got pretty close. So this went out trading at 399.74. And right here, so went from 25 bucks to 331. So up 306, over 1,200%. So that's just another, kind of trade setup that you might get. And here's just one more to show you. This was on another pinning trade on SPY for a put Butterfly to the downside. And here it was traded at 573. We're looking for a downside pin at around 460. So I'll just kind of run through this pretty quick. So got in here, looking for a potential downside move here, that 560 area for a pin. And so set this up as a butterfly as well, but to the downside, 565, 560, 560, 555. Cost 39 cents, 39 bucks. And if, we pinned it at that 560, this would be up 461, over 1,100% return if, it pinned there, but we got pretty close. And so this one went out right there at 560.32, right there, overshoot a little bit, but went from 39 to 456. So up $417 per spread, over 1,000% return there. And then one last thing to show you, if you do want the alerts, this is the other thing that we do, very selective earnings trades when earnings season pops around. Now these are very selective. We've started this back in June of 2019 through Friday. We've had 152 trades closed, 112 winners, 17 break even, 23 losers, 85% win break even rate on those unaudited, and just to show you that. So if you'd like to learn more about how to zero in on these really great trades and avoid having to spend your precious time, capital, and energy trapped inside losing trades, please use that link that I gave you here, and you'll get access. This, breaking it down, this is like $3 a day. So if you can afford $3 a day, if you break it down like that, that's what you're going to be looking at. And hope this is some stuff that everybody wants to jump in on and take advantage of. And again, not only do you get the alerts for the next 5 months, which you can stop and start whenever you want, but you also get access to my trading club. So use that link there. So that's kind of an overview, and then use that alert 25 to go into it. And let me know if you have any questions. So this includes my alert service, 5 months, all the 5 different trade setups, 5 months of the trading club. So you get it today for $450. So that's, if you break it down, like $3 a day, and you'll have access to whatever I send out. It could be a butterfly or a condor, it could be calendars, calendar diagonals, pinning trades, credit spreads, earning trades. So a lot of different trades like that that could be coming your way. So, this is basically also you're tapping into my trading career of over 4 decades of my experience, my proprietary software and research that I'm doing to cherry pick the very best trade setups I can find, before the herd sees them. And then I matched these up with the highest probability option strategy. So I'm doing a lot of stuff there behind the curtains before these trades ever go out. So I'm, spending a lot of time every day. First off, looking for the trades, and then you're looking for the best setups and the option strategy. And then once we get the trade on, I'm monitoring the trade throughout the day and sending out any text alerts, for updates to let you know what they're looking at, looking like, and various things like that. So it's a lot that goes on that I'm doing for these types of trades. Now, with the alert service, again, 5 months to the alerts, all the 5 different alerts that could be sent out, plus access to the trading club. And so $450, there's 2 pay. So we get all 5 trade alerts for the next 5 months, 8 to 12 stocks or ETFs or more. These are the types of trades that can come out. Then I do a trade guide video review of every trade after the close that day to show you kind of what the reasoning behind doing the trade, and then what I'm expecting or looking forward to on the trade plan. So I do that review. Trades are listed and archived. Then we do a weekly Q&A usually every Tuesday, live and recorded, and then a daily video newsletter. So every day after the close, give you my outlook on the markets, what we're looking at, things like that. So do that every day for you as a member of the trading club. And then we have the virtual trading room open every day during the week from Wednesday through Friday, 9:30 to 10:30 Eastern, and then the discounts on anything on my website. 50% off all my software, trading courses, all that kind of stuff. So you're going to get all this for the next 5 months for just $450. So if you'd like to, basically it comes down to your very own research department and professional trading mentor, but at a fraction of the cost, just like $3 a day. I think you're going to get a lot out of this service. And so no more manually, combing through thousands of charts and indexes. I don't know how frustrating you've been with that, but it can get pretty frustrating when you're looking at a market like this crazy market, trying to find good trades. And no more debilitating confusion over what strategy to use, option strategy. I'm doing it for you. And no more agonizing over the best time frames to use. It's all done for you. So that's everything you're going to get. And if you'd like to do it, make sure you use that link. Here's a little feedback. This from one of my members, Dan. He said, you're very diligent and totally thorough with your analysis. That is the foundation of the success of your alerts. I paid for my subscription with the first 4 trades I took with you when I was just learning how to trade options. Please feel free to share this. So a lot of members have done this. They'll just follow the trade setup that I send out, and they're learning as they go. And here's Scotty said, it'll be the best investment you make. Go with the elite package, great group of traders as well. So I hope everybody will join in, take advantage of this, and then we'll go from there. So here's what we've done since the start of the first alert service that went out back in 2018. Still running at 79 win rate, so unaudited. So really happy with these results. So when I do send out a trade, a lot of the members, they'll just do their own thing. So for example, Slumberjay, members just bought calls or something, or, for a short, they'll just buy puts. But I will always give you a suggested option spread trade, okay? Because I really want to keep the risk super low for you. But if you want to do it any other way, then you're welcome to, right? So I'll give you the suggested option trade, spread trade usually. What the entry level is, profit targets based on what I call it price target mapping, what option series to use, stop loss level guidelines, which are always being updated by text. Trades are listed in archive for you, so you can go back and look at them. So that's all for each and every trade. Then to do, like I said, a setup video review at the end of the day to show you why it was done. Daily market video newsletter goes into more detail on the markets. Then you'll have access to weekly Q&As live and recorded every week for the next 5 months. Access the virtual trading room during the week for the next 5 months. Discounts, educational vault. and all that. So there's a lot here for you. And here's the alert membership to the trading club. So you get access to that virtual trading room Wednesday through Friday, 9:30 to 10:30 during the week. Access to the daily market video newsletters, our weekly Q&As, live and recorded, educational vault, trades are archived so you can go back and review, discounts on my website. Go in there, you'll have a members code and it'll give you 50% off everything. And, you know, that's pretty much it. So here's, like Danette said, trading room experience daily is awesome. You cannot get this anywhere else in real time, nothing like it. So just kind of a good overview on all that. And here's what you've got. So I hope everybody will take advantage of this. And if you have any questions, let me know. Yeah, make sure you, George, use alert 25. Here, I'll put it in one more time for you. There you go. And alert 25, make sure it's small cap. All right, everybody. Appreciate everybody being here, and I'm looking forward to seeing a lot of you in the trade room and at the Q&As, and looking forward to sending out my alerts to you. So thank you so much, everybody, and have a great rest of your day, great rest of your weekend. Thank you so much.